So what should you do if you want to invest but aren't quite ready to take the plunge? Well, here are some of the investment alternatives that you can look into that you can study up in the meantime. All right, number one are funds, right? Now, I'm not talking about mutual funds. That's the thing that everybody talks about. And yes, you can put money in mutual funds, but that's not an alternative investment. That's Wall Street investment. We're talking about Main Street. This is the stuff that really, those of us that have become millionaires and multimillionaires and even billionaires, I'm not the billionaire, but multimillionaires, yes. These are the things that we've learned to do that have helped us make so much more money, and we're investing in real assets, not gambling in markets. So funds, when we talk about this could be things where you're investing in a investment fund with somebody. So this investment fund could be more of a private fund. This could be something where they're borrowing money, or they're lending it out and doing things. So for example, I have a friend where he has a lending fund. Now what is he lending to? He's lending to real estate investors that are turning around and flipping properties. So he's lending it to them. They go and they buy the property, they renovate it, they then sell it for a profit. They take the profits, pay them the interest, and then that pays into the fund. So all the interest that we're earning, essentially becoming the bank, right? Becoming a private bank for them, we get the interest off of that. So there are funds out there that you can actually do lending with. It's awesome, that you can do that. There's another fund that I have a friend that does that fund just goes and invests in a bunch of short-term rentals. And the profits on the short-term rentals pays into that fund, and then that pays to you as an investor. You buy into it, you invest a percentage into it. They pay you either an agreed upon interest rate, many times it's double-digit returns, often it's at least 8 or 10%, or they'll pay you profits or both. And so that's a really cool way to do it. I'll even tell you a bonus here, there's even short-term lending or long-term lending you can do. You can personally become the bank for someone else. You can lend directly to that investor that's using that money to make more money. For example, we have somebody in our network of investors that he goes and he buys manufactured homes, renovates them, and then turns them into rental properties. Well, guess what? He's actually paying people 5% to hold their money for just 4 months. So he's using their money to go and invest and buy these properties and then pays them back their money, their principal, plus 5% every 4 months. The cool thing is that you can keep reinvesting again and again. That means you can make 15% a year lending him that money. And he's just short-term doing it, right? So every few months you get the money back. You could reinvest with him or not. You can use that money elsewhere. I have other people do longer-term type stuff. I have another friend that's in our network that he'll actually pay you 10% for 1 year's use of that money. Or if you keep it there year after year, he'll pay you 11% per year and just keep paying you over and over while he goes and renovates properties out in the Northeast. So there's lots of ways you can do that. Number 2, are syndications. Now, syndications are a little bit different. These are actually monitored a little bit by the Securities Exchange Commission, the SEC. Syndications are really partnerships. You pool your money together with other investors to buy often a very big project, like an apartment building, or it could be a commercial building, like where businesses rent out of. It could be self-storage units, things like that, where you're pulling your money together, you go and partner into that deal, and then you get paid your percentage. Sometimes they'll pay you a certain minimum percentage called a preferred return. Other times they just pay you profits. This depends on how the deal's set up. One cool one I just saw recently with one of our other contacts, he had a fund that was investing in a couple different apartment complexes in the state of Michigan. Out in the suburbs of Detroit, a really growing area that people are moving away from as they're leaving Detroit, but going into these little higher class areas. Well, he called it, the Michigan 2 project. Well, guess what? The minimum return they're paying, 16% a year or 4% every quarter. Needless to say, our clients were definitely super excited about that. They even have a waiting list in case somebody bails out. People are like, I want in, let me in. Awesome opportunities you have to do that. None of them are that big. Some of them might pay you 6, 7, 8% for a minimum return and then pay you some extra profits on top. In many cases, these syndications, it's not too uncommon to see them double the return within about 5 to 6 years, depending on how long they do this deal for. Often you could be in a syndication for a long time, but in many cases, these people will have them for X number of years, sell off that asset, and then you get all the profits at the end, as well as your money back. Again, notice the common theme is you get your money back. That's what's key. You always want to make sure you get your money back. Number 3 is real estate. Now, I'm not talking about buying the real estate property in your backyard because you thought you could get a good deal from your neighbor. Usually that's not a good deal. I'm talking about buying what I refer to as turnkey real estate. Turnkey real estate is where somebody else helps you find the property. They help you get the financing for it if you need to get a mortgage. They also set you up with a property manager. Usually it's them. So they help you find the deal, You already know the numbers ahead of time, so you know exactly what kind of profits you make, and they'll property manage it for you. Your job is just to simply buy it and collect the rent checks, collect the net profit off of that property. Right now, even though real estate interest rates have gone up, still you see at least 6 to 8% cash on cash returns, meaning that's the money you make from just the rent, not including any appreciation, not including tax benefits, not including the fact that the renters are paying down your mortgage for you. You actually make 4 different types of returns off that money. But there's even some that are making, even currently, even right now in this environment, double-digit cash on cash returns on just the rent alone without any appreciation at all. So huge opportunity there. Another one, oil and gas. Right? Now, oil and gas is a different alternative investment. I generally don't recommend going for those drilling type of investments where it's a hit or miss situation. You can win big, but you can also lose big too. I don't want you to do that kind of thing. I like oil and gas investments that have some real estate backing it up too. So you're not just getting paid based on how it makes money, but what if you could get paid on the land as well? Or in other words, what if you weren't the one doing the drilling? What if you had an oil company rent the land from you, pay you a lease payment for the land, and then they also pay you some of the profits from all the oil or the natural gas that's being pulled out of it. And right now, especially with the way that things are going with gas and natural gas, oh my goodness, that could be one of the best inflation benefited investments you can be looking at right now. Right now, I've seen with our own investment that we have in a deal, it's paying about 15 to 20% a year currently. Awesome returns, and they even get a slight tax advantage as well. So that's another option. The fifth option you can look at, and this one's not a passive investment, just so you know. This is one where I would recommend if you have some time on your hands, if you have at least time for something like short-term, 20 hours a week. Another option you can look at are franchises. There are franchises out there, and I'm not talking about the McDonald's or another crumble cookie franchise that does not need to be out there to kill people with all the sugar, right? I'm talking about franchises that could be the simple, almost mom and pop type businesses. This could be like, I was looking at a junk hauling business, a junk lugger type of business, You could look at something like that. You could look at a gym, or something of that nature. There's all kinds of opportunities in the franchise world in almost any industry you want to look at. The great thing is there's already a system in place. You don't have to start from scratch. And if you buy an existing franchise, you don't even have to hire new people. You might have to hire somebody new possibly, but if there's already a system in place, they already have customers or clients coming in, you might be able to buy in it. It's almost turnkey, isn't it? It's almost turnkey in the sense that it's paying you right away. We actually had one client where they were full-time real estate investors that said, you know what? We want to diversify away from real estate. What else can we do? Well, they went and they got a laundromat franchise. They got a really high-tech laundromat that was able to operate more on its own, not like the old, coin change type thing, but something that actually leverages using cards like the 21st century should have for laundromats, leveraging that. Now they worked in the business early on because they want to get quick profits. And then after that, they got out of it. They're now just managing it about 5 or 10 hours a week, letting somebody else run the laundromat, with their part-time employees. So there's so many things you could be doing. So just to recap, like I said, there's a whole world of investing that most people never even realize are there, such as funds, where you can go into an investment fund, or you can even do lending, whether you do it through the fund or you're the one lending directly to the investor, getting paid sometimes at least 10+% returns on that money. That's also true with getting into a syndication where you're pooling your money with other investors, getting into a syndication, investing in whatever other project you might want to do. By the way, I have one contact that actually pays consistently 12% a year on his syndication. In fact, it's actually in writing that that's what he pays, right? Awesome, that you can be able to pay that and have predictability with your money. 3, you buy turnkey real estate. You can buy those properties that can actually cash flow for you, give you tax benefits and possibly appreciation. One of my favorites personally. 4, another favorite of mine, oil and gas. You can actually invest in something where it pays you returns. And if you buy it right, you get paid on the returns on the land and the oil or gas that's coming out of it. And then 5th, of course, are the franchises, where you can make money off that, where it's a kind of a quasi-semi-passive, semi-active type of investment. So guys, if you thought that was awesome, you want to hear more, check out our next video, how to make $5,000 a month in passive income right now.